The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 26th, the terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone is having a great day. How about we have an extraordinary one? And of course, the easiest way to do that, it's to always remember that life is happening for us, not to us. That's right. When you and I can make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check on the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. But more importantly, I'm here to serve you. So feel free to pick up that phone. Dial on in at 877-927-6648. If you can't dial in, we've got you covered. Send me an email. Let those fingers do the walking. Steve@TFNN.com. Inside the subject heading, please put radio show question, of course, in our Tiger's Den. Any ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow up 114 points. 25,630 is the print. S&P's up 16 points. So all the indices are mean and green, up about 0.6%, pretty stable across the board. Spot volatility index is trading out at 1539. That is below the 50-day exponential moving average, $16 and change out there. That is bullish, or says the market has liquidity as we speak right now. Gold's off $7, silver down 12 pennies. Light sweet crude up $1.11. Leading the charge to the upside, it is Hunter Maritime Acquisition Group up 144%. Maybe there was an acquisition, or maybe it's an IPO. I don't know. Booking Holdings up $25. Amazon up 18. Chipotle up 1 3/10%. That's $11 to the upside. ABMD, ABIO Med is down $14 or 4 6/10%. Molina Healthcare off $12. WellCare Health off by 8. So all of the healthcare stocks leading the charge to the downside out here. Of course, I want to look at what you want to look at, and the first request comes in from Phil, and Phil asked if I could give him the larger, the bigger picture, the longer-term view, just referring to just a follow-up to the segment I did last night with Tom out there. So, Phil, the way that I would begin by doing that, or would be doing it for anybody, is I would first want to use that good old Jerry Maguire, show me the money. Because when you really think about it, with regard to the most fundamental thing about technical analysis is understanding where the money is flowing. So let's begin there so that we can understand the big picture. Now, the easiest way for me to do that is to take a look at the big picture out here and look at the Dow, the S&P, the Nikkei, the DAX, the FTSE, the Hang Seng, emerging markets, gold, bonds. I even got wheat, and I've got some commodities out here. We've got light sweet crude, and what this does, Phil, this set of data that you are looking at out here takes a look at the primary currencies out there, the U.S. dollar, the euro, the pound, and the yen. And it takes a look at each of these instruments, and in the column labeled ROC, rate of change, this goes back, in essence, 40 quarters. This takes us back into the March 2009 timeframe. And the rate of change tells you that percentage rate of change. Now, interestingly enough, if you just take a look at the Dow out here, you will see that right now the Dow, and I'm using the equity futures contract out here, for a number of reasons. That doesn't matter. The Dow is up 455% in terms of euros. They are the big winners out there. Now remember, if you're managing your wealth fund out here, you're diversified. You have both U.S. equities and foreign equities. But right now, what you and I want to do is understand where the money is flowing. There's all kinds of stuff that folks are going to talk about on the boob tube out there. But what none of them really do for you is take a look at the instruments to help you understand where the global flow of currency is going to. Look, the Dow itself is up 375% since that 40 quarters ago out here. Now, when you take a look at this, what's most important for you to understand is your eyes go up and down and you take a look at, what's happening for the Dow and S&P versus, let's say, for emerging markets. Emerging markets up 70% in terms of dollars. How about the Hang Seng? 110%. How about the Nikkei? 164. How about the Shanghai? Only 26%. How about the FTSE? So all of the capital, the big dogs, the big kahuna out here is flowing into the U.S. So important to understand with regard to the big picture. Now, look, some of you say that was 2009. I agree with you. We can take a look at what the global flow of currency is doing for the last 14 weeks. That takes us back to the week of Christmas Eve out here. And what we can see is that the U.S. markets, between the Dow, the S&P 500, by the way, they're up respectively 14 and 16%. Again, we're looking at a weekly time frame chart out here. And what you can see is that the U.S. continues to lead the charge. And that's really, really important when you and I are going to do the analysis of what's going on inside these markets. It's not now. The Hang Seng is up. It's up pretty decently. It's up 11%. The Australian S&P is up 12% out here. Still not outperforming. The only thing that's been outperforming the U.S. markets since the bottom back in December has been light sweet crude. That's up 28% out there. But otherwise, and hey, by the way, commodities. If you take a look at the Goldman Sachs commodity index out here, it too is kind of like neck and neck with regard to the Dow and the S&P 500. The point I want to make is that the lead dog, that's the U.S., has not lost the lead. The global flow of capital is here. People talk about the Powell put. Have you ever heard that? The reality is it's the global flow of currency put. That's the deal that's out here. We have to understand. You wanted Steve-O to show you the money. I've just shown you the money in an easy to look at method to understand where that global flow of capital is. Now, if we just go ahead and break it down in between the Dow priced in dollars, left-hand panel versus Dow priced in euros, you're going to see consolidation patterns out here. So we're within a consolidation pattern. We are up towards the top of that consolidation pattern. The euro, much closer to the top, which would be about 23,231 euros for the Dow. What we don't know is whether or not, Phil, price is going to be able to break through this, bust through this level. And if it's not, what do you know about a consolidation pattern? You like to buy the bottom of the consolidation? You like to sell the top of the consolidation. So in essence, now that's not to say that the Dow price in dollars can't move higher, 26,616. But we're closer to the top of that consolidation versus the bottom. So in other words, now is not really the time to put new capital to work inside of the U.S. markets, not just yet. But we're not done. When we get back, we'll take a look at this. The questions coming in from the den and everywhere else. This is Steve Rhodes with TFNN, showing you the money. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we're trying to try to give you, and because of a question coming in from one of our listeners out here, the bigger picture of the market. The most important thing for you to understand, or I'd like you to understand, is just simply the global flow of capital. And the reason is because it's pouring into the U.S. out here. And so if things go to heck in a handbasket out there across the globe, this is the place where the money will flow. It's been flowing here since 2009. It's been flowing here since this past December. It's going to continue flowing here. And that's really important to understand from a trading perspective. Now, we took a look at the Dow priced in both euros and dollars. We can see the consolidation pattern. If we take a look at what's going on a shorter-term basis right now, this is a daily time frame chart. You're going to see a consolidation as well. Maybe if I just simply start from scratch here. If I start from scratch, that just means I turn off a few things, and we come back to this. So let's do that. Let me do this. Let me do this. Let me do this. Here's the well, there we go. So here's the consolidation for the Dow Equity Futures contract on a daily basis. Now, the consolidation in essence was picked up because of this hammer candle out here on March 8th and the retest of it. So it looks slightly different if we're going to look at the cash indice. You and I like to look at the equity futures contracts because it just simply provides us with more data out here. So we can see that if you were to ask Stevie, where are we at with regard to the Dow? And see, yesterday, remember when we were taking a look at this yesterday, we were looking at the Dow getting down and testing support. Support, by the way, was the bottom of its daily TAS profile. Shoot, I can't show you that here. I could. It's going to be easier for me to come over here and turn that on right now. Well, let me try to do that. Oh, come on. Come on, work with me. So here is the daily profile, I believe. Yeah. So I'm just going to do this, and we'll go back to take a look at that consolidation so you can take a look at it. But see the bottom line here, this green line? It's our market profile. It was until you took a look and you watched the Trader's Edge show, was an invisible level of support that you didn't know existed out here, and that was at the price point of $25,397. Now we have both that level of support. We have the trend line, of course, that held. Prices bounced up, and it's trading right now at that point of control, the center of the box out here. And this is the area where both buyers and sellers believe there's fair value inside the Dow equity futures contract, those folks that are using a daily time frame from their trading perspective. But now we go back to the daily consolidation. And the cool thing about a consolidation pattern, this holds true, Phil, for the larger term time frame as well. If you bust out to the upside or to the downside, what it does is it gives us a measured move. So the green rectangle is the measured move to the upside. The red rectangle is the measured move to the downside out here. So if the Dow busts to the upside, the projected range is 27,123. That would become the price target out here. Likewise, if the Dow were to bust out to the downside, then we're looking at about 24,317. Don't use the last three digits out here as an exact, because breaks of consolidations or measured moves are equal to or greater than. That's what we would typically be looking for. The same will hold true for the Dow price in dollars and euros when it does break its consolidation. Is now the time? I don't know. Let's continue taking a look around. If we take a look at trend lines out here, and we just simply get rid of those consolidations, here's what we're going to see. We're going to see that the Dow is stuck in a little bit of a trend between a declining tops and a rising tops out here. And we're starting to get towards the end of that snow cone. So what you should expect at this stage here, the Dow's in a consolidation. The market is basically choppy. It's trading in between support and resistance, no matter how we slice and dice it. Now, speaking of slicing and dicing, we can go ahead and take a look at the Dow, and we can look at the daily, the weekly, the monthly, and we can even take a look at the quarterly charts out here and take a look at our market profiles. And that's what this set of charts here shows us. What's important about this, when we take a look at being in a consolidation, it's so important to understand where is resistance out here. So on the daily, we've already covered that. Let's not spend any more time on the daily. Let's let our eyes go over to the right-hand side, the upper right-hand side. Take a look at the weekly time frame chart for the Dow. What is it that we notice? 26,144. That's a significant resistance level. It's a reason you wouldn't put long-term money to work inside the market, not just yet. We're up near the top of the Dow in euros and dollars on the longer term or the monthly time frame. We're up at the top. By the way, the tops of these boxes, this is where sellers are lined up. This is the resistance level out here. If you break above it, that's a different message. If you look at the monthly time frame chart, that's the lower left, you're going to see that the top of the box is measured out at 25,928. We're trading at 25,653 out here. So that's the monthly time frame. That doesn't even take into consideration the consolidation, but we're up near a level of resistance out here. And when we look at the quarterly time frame chart, that level of resistance is 25,855. There is a message here. Price is up at resistance. Doesn't tell us whether it can or cannot take it out. Taking it out would be a bullish sign out here. We don't have that bullish sign right now at 123. We have what appears to be the end of the counter trend rally within inside that larger consolidation pattern that you and I looked at out here. What else can we take a look at with regard to the Dow? We can take a look at its horizontal trading ranges out here. These horizontal trading ranges for the Dow, these are the daily horizontal trading ranges. These are established by taking a look at opens and closes, because we're not interested in the upper and lower wicks or shadows of a candle, because those are nothing more than the extreme emotion during that session. This is a daily chart, so during the daily time frame, we're more interested in the body of the candle. You and I, we love bodies. And so we want to understand the opens and closes out here. So here's an automated tool. It does that for me. It lets me know once it identifies the largest number of opens and closes for the time period that I'm looking at. It then figures out what that level is, and it just keeps adding those horizontal ranges. Here's what we can see. You can see on the daily basis, you can see the descending and rising trend lines. And here you see at 25,558. There have been 41 opens or closes for the Dow equity futures contract at that level. You can see there's been 39 at the 26,191 level. So it's stuck inside that consolidation range out here. If you bust through this, if price busts through this, closes below or above one of these ranges, then that next ceiling or that next floor becomes a target. 26,824 the ceiling, 24,925 the floor. So that, Phil, is what I take a look at. How do I summarize it? I summarize it like this. We're up near the top of the consolidation, and we could easily see a pullback all the way back to the bottom of the consolidation. Consolidations can last a lot longer than your patience out here. And that says, yes, price could run back down to the 23,377 level out here. As long as the global flow of capital comes into the United States, what you want to look at, it would be the gift. It would be the gift of potentially a lifetime, would be pulling back towards the bottom of that consolidation. So I hope that helps you out. Thanks for the question. Hope that didn't bore everybody out there. But you ask, I will show you the money. We had a request out here inside the Tiger's Den. This coming from John in the Tiger's Den, wants to take a look at the GDX and several of the components inside there. So if we take a look at the GDX out here, let's look at it from 3 different time frames. Let's take a look at the daily, the weekly, and the monthly time frame. Here's what we know before we go to this commercial message out here. Price is above the top of the daily profile, the top of the weekly profile, 23 bucks even Steven, and above the top of the monthly profile. Sounds very bullish to me. Stevie Rhodes with TFNN. We'll be right back. Welcome back, folks. Dow's up 101. S&P is up 15. And so let's go back to the GDX out here. Let's try to answer the question for John. Just take a look at what's going on here. So here's what we know about the GDX. First of all, we already know that price is above resistance levels, daily, weekly, and monthly out there. So unless we see some type of topping signal out here, that bodes well for the GDX. Now, if we take a look at yesterday's price action, it was moving into its most recent swing point high. Takes you back to February 20th. The volume on that swing point was 62 million shares. If we take a look at supply and demand, yesterday's move higher was pretty much a demand move out here, not excess supply, because price was moving higher with 58 million shares. 58 million compared to 62, that's not too shabby out here. Today's volume 17 million, so it's lightened up. I don't know what it's going to be like at the end of the day. If you close inside a swing point with volume, says you're going to go test the top. On light volume, says you may go test the top. What should the GDX do here? The GDX on just simply a daily time frame, as long as it closes over 23.14, volume or not, should go test the 23.70 level. If it takes out 23.70 and does it with volume, it'll set up another A to B equals CD. What's an A to B equals CD? That's kind of our lightning rod, our lightning bolt tool. That's our price projection. It's our progressive price projection tool that gives us a range as to where price is likely headed to if it can take out the B point, the swing point, what we just looked at. That would then set up 24.88 as one possibility, 25.83 as the next possibility out here. So the GDX looks pretty good, looks very good. If we look at the daily time frame, we come over to Stevie's other tools out here. We don't see any topping signal. We see that today could be day 5 of that Tommy DeMark setup pattern out here. No big deal. On a weekly basis, speaking of Tommy DeMark out here, if we take a look at the high from the trading week of July 13th, you'll see a green solid line. We are above that. That is a resistance line. Closing above that tells us about a change in trend. So much so, and not that there's not other resistance out here. There is, going back to September of 2017 in the 25 area. But where the GDX may be headed to is that secondary Tommy DeMark setup trend line. That's in that 29.75 range. That's what the weekly chart is giving us as far as projections. On a monthly basis out here, the monthly basis is just kind of so-so. When I say so-so, hey, it's got a nice bottom. It's got that Rhodes momentum indicator signal bottom out here. Prices above Stevie's red line. That's good. Prices above this little blue dash line from July back in 2018. That's good. Good, meaning bullish out here. Where it has the resistance and the real resistance on a longer-term basis to watch for is going to be August 2016. That bearish reversal, bear sash candle out there at 31.79. So at this stage here, all looks good inside the GDX, and will have to remain that way until the market tells us something different. We go ahead and we don't get married to these ideas. We just simply take them to the dance, and we go home with them, and when there's new information, well, then we make our next determination as to what to do. But right now, things look very bullish with regard to the GDX. Z, I hope that helps you out inside the Tigers. I know you want to take a look at some of those other individual equities out here. Let me get to some of these other questions that have come in, and you type in if you need me to look at that, and I will do so. So just a couple of questions that have come in, but let's go get to those. The first one coming in from Earl the Pearl. Earl writes in, "Hi, Steve. On Friday, you," referring to me, "said the 30-year bond was making a top." Is that exactly what I said? Is that reflected in a slight pullback in the TLT? Well, here's what I was saying out here. Let's go take a look at the 30-year bond. I believe what I was trying to say was the 30-year Treasury bond had completed its move of a move, the bust of the consolidation area. Remember, we just took a look at it. We just took a look at consolidation patterns inside the Dow. Price in dollars, price in euros. We looked at inside the Dow Equity Futures contract on a daily basis. And what we said is when these consolidation patterns get busted through to the upside or to the downside, it gives us a measured move. So now we take a look at that. So here's the consolidation between 146 and 1130 seconds and 143 and 1930 seconds. It's very clear where the consolidation pattern was. Then once we have it, all we have to do is take that price distance to the upside or to the downside and identify. Remember, price is going to move to that level. Usually the breakout move is greater than or equal to. So what I was really trying to say on Friday, and on Friday, here's Friday's candle, March 22nd, a nice strong candle. Why did price stop at 149.04? I mean, I didn't make this up. That was really the top of that consolidation breakout area. So it hasn't generated a top from the standpoint of going short. It has not done that. What do you mean, jelly bean? Here's what I would mean about that is, now, I'm taking a look at, this is my synthetic or composite contract, so I'm not using the June contract out here. But that's okay, and it's especially okay since we've had a rollover recently out here. And what I like to take a look at is then what are the profiles. Here are the daily and weekly profiles. And here's the thing, Phil, is that price is well above both the daily and the weekly set of profiles out here. If I go back and I take a look at the June contract, let's do that, because this is going to show us a different set of profiles, but you're going to see limited data out here. See, we really have limited data to go ahead, and for me at least, to be able to say, you know, these profiles that I show here for the daily and the weekly, in fact, there's not enough data here for it to generate a weekly profile, so therefore let's not really spend any time there. So you're above resistance daily and weekly. The only thing that we could do is come back here to this chart, and we really should do this, and so let's go ahead and do it. And what I mean by that is let's take a look at the monthly levels. Let's take a look at the monthly levels. Because we have enough data out here, we should be able to identify where the support and resistance is based upon the TAS market profiles out here. And when you know it, they're not going to do you and I any good because price is above that level as well. No, yeah, it is. It's above that level as well. So what's that leave us with? That says... Now, if we're looking for some resistance out here, believe it. Now, there's other tools that we need to go take a look at to try to identify. But if you're going to ask me, let me do this here. Let me come back and turn off the week. Let's get a little bit of noise out of this chart. And by a little bit of noise, we're getting rid of the daily, the weekly, the monthly, and we're just going to put the quarterly out here. So, Phil, if you're going to ask me, which I think you are, where is the TLT likely headed to, or where are Treasury bonds headed to? If they close above 149.04, the top of that measured move level out here, what they're likely headed to is 151.07, the top of the quarterly. The quarterly, that is. Here, I'll put the quarterly time. No, I don't want to do that. If I do that, it's just going to measure. It's just going to kind of mess up a couple of other things out here. So don't let me. I won't do that. But yeah, I already messed it up, I think, just by doing what I just did. So there's the quarterly time frame, a top. Let me just make sure here. So here, if I look at the daily, here's the June contract. So we'll do this before we get to the break, and then we'll go to that next question. Price is moving higher. It is doing less relative energy out there, but not until we get a bearish reversal candle is there any sign of a potential top inside the 30-year Treasury. You see, the global flow of capital, people want out of euros and pounds, and what they want in is dollars. 30-year Treasury, easiest way to do that. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So Bill H writes in, says, "Hi, Steve. Could you share with us the tool you are using to see the percentage change between all markets?" So, Bill, I think you're referring back to this chart here, and this is coming from my eSignal application, and I can't speak to other data applications and charting packages out there. I don't have the same ability to do this, for example, with inside my NinjaTrader system. But here on the eSignal system, it allows me great flexibility, allows me to take an instrument and divide that instrument by another instrument if I would like to create some type of ratio. That way, for example, some people might use that to take a look at the strength of a sector with inside the S&P 500 to see which sectors are show the most relative strength. That would be one way to use it. I'm using this with regard to taking a look at an instrument and pricing it in the other major currencies out there. Now, I could use any of the 160 currencies that are currently traded out there to see how this is trading, but instead I want to use the major currencies. I want to understand what's going on inside the major markets, but you can drive down as much as you want. All I'm looking at is the rate of change. Rate of change tool is pretty much available on most applications. So this allows me to take a look at the Dow. Again, I've just chosen the 4 currencies out here. The Dow priced in U.S. dollars, euros, yen, and pounds. So important to understand what our brothers and sisters, our cousins, our neighbors, our friends across the pond are thinking out here, because money must flow somewhere. And it's all based upon confidence. We can take rate of change and just simply convert it from rate of change and say, this is the confidence meter. Where is it that traders, where is it that money has confidence? And it just simply shows us, because wherever there's confidence, that is more likely where the money is going to go ahead and flow into. So I don't know if you can do this on your application. I hope that you can, but you certainly can do this on the eSignal application out here, and that's what I do. This chart here, as an example, you can just take a look at this, but this is just going to tell you how instruments are trading priced in U.S. dollars. This just is a look at 9 different major markets out there. The Dow is represented by the Dow Diamond. So just look at the ETFs. This is so that each of you can do this. You can absolutely do this. Whether you can put it on one screen like this, that I don't know. But next to the Dow is the UK. Next to that is Australia. Then underneath it, we've got Canada, China, and India. And below that, we've got Germany, and then Japan, and then the emerging markets out here. And the red horizontal lines towards the top, horizontal or diagonal, are just simply referring back to the highs in January in 2018. And here what you're going to see is the Dow is still the strongest market. The Dow is the only one close to the top of that high out here, whereas the others, for the most part, India has just broken through a trend line over the past couple of trading sessions out here. Germany, a downtrend line, but well below even the bottom of the so-called consolidation level that we were using, or we are using, which is the February lows, February-April lows inside the Dow. So the U.S. is outperforming just in dollars. This doesn't tell us how it's doing in the other currencies out there. So, Bill, thanks for writing in. I hope that helps to answer your question. So no other questions that are out here right now. It seemed like taking a look at the GDX the way that I did, that worked out for UZ. So let's try to understand what's going on in the markets here right now on a short-term basis. And to do that, let's just step back a moment. And when I say step back a moment, let's go take a look at what is it that you should be watching during the day out here, or really at the close of the trading session. So to do that, we're going to come back here. First, I want to be able to provide you with the current market profiles daily and weekly for the 4 equity instruments. The reason is, I'll be a son of a gun. So earlier in the day, so the Russell 2000 continues to try to form a new profile. And Jay, if you're listening in, I apologize because that profile is now vanished. The profile I was referring to was a new one that was trying to form inside the Russell 2000. It's not there. Here's what we know that took place today. Why did the NQ, why did the market stop where they did? Well, the NQ and the Dow both hit the top of their resistance level, the top of the daily profile. Inside the NQ, the number was 74.44 and a little bit of change. The high, 74.47.50. Now it's trading right at that point of control. Buyers and sellers on a daily basis both believe there's fair value right there, right here, right now. If you take a look at the Dow Equity Futures contract, 25,818 was the top of its daily box. What's the high today? The high today, 25,822. 4 points on a $26,000 instrument, smack dab into resistance. Now, what was also going on at the same time, let's just take a look at the NQ out here. This is a 30-minute time frame chart for the NQ. What this also formed was a Gartley sell pattern, about a 0.618 retracement from the high to the low out here as you take a look and watch this on Tiger TV. Now, this confirmed a Gartley sell pattern out here. Support has not been busted through. Support is being tested right now, which is the bottom of a 30-minute profile. We're pretty much right on it. I don't know where this is going to close at 2 p.m. That's the candle session we're at. But I would put kind of ultimate levels of support to be watching throughout the afternoon at 73.58.50, and the secondary one a little bit lower, 73.27.50. I'd say if we close below that, that all today was a counter-trend rally in a market that, in fact, wants to trade lower out here. Now, look, I recognize we're coming into fund buying and so forth, and the NQ, and here, if we take a look at the NQ, let's come back here. Let's do this, because when you make those Gartley patterns, in this case here, it's a Gartley sell pattern. We're going to go switch over to the 30-minute time frame. As you know, there's always 5 different potential outcomes. If we take a look at those 5 outcomes, they're retracements. The first 4 are retracements. We're going to take a look, and by the way, that Gartley sell pattern was nothing more than an A to B equals CD pattern out here. And the first outcome of that Gartley sell was attained. It was attained about an hour ago, and that price level was 73.87. If we continue to trade lower, outcome number 2 would be 73.50. Outcome number 3, 73.23. Outcome number 4, the 100% move, getting back to that A point of that A to B equals CD. That'd be 72.90. If this is the extent of the retracement, the market decides to trade higher for the next couple of hours out here, then the top of the daily box is likely to get taken out, because this is just a very small retracement. Nonetheless, we do have a confirmed Gartley sell pattern, and we haven't seen a move higher, at least not just yet. Now, when I refer to and I say, hey, look, there are some topping signals. Maybe this is a market that wants to trade lower. If we go take a look at the daily time frame for the NQ out here, we're going to see that when it formed its high on Friday, it did it with that Tommy DeMark setup 9 count. If you look at the low that formed out here on the 26th of December, it was also with that Tommy DeMark setup 9 count. They work if you know how to work them, if you know how to use them. And now on a daily basis, price is trading below Stevie's green line, 74.11. That's a resistance level out here. So you got a topping pattern on the daily. Guess what you have on the weekly for the NQ? You've got that 9 count pattern too. Something to think about. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So we got the 2-minute wrap here. Let me try to just add a few more things for you to be able to watch. So you already know about the profile levels to be focused on for the rest of the day out here. We know that resistance has been hit. That's in essence what stopped the rally. It also helped us set up these Gartley sell patterns on the short-term time frame. Now, at 7:30 or 8 o'clock, 8:30 this morning when I sent out my newsletter, clients already knew where the price projections were for those Gartley sell patterns, and they were hit within a few points of where the target was earlier this morning. That's neither here nor there. What are the other things to be able to watch today? Now, first, here's the correlation chart between the S&P 500 and the high-yield debt, HYG is the ETF, if you're taking a look at it. Whenever these bars, now this is just a 5-day correlation. When the bars are above zero, which most of these bars are, it tells you a positive correlation. Directionally speaking, they're both moving in the same direction. Why is that important? Well, it's important because if we take a look at the HYG on a weekly basis out here, we've used these Tommy DeMark setup trend lines. That's the green dashed line. If you take a look at where the HYG got to last week, it was resistance. If price for HYG closes above that high, that's 86.31, that'll be an indication of a change in trend. Why is that important? Well, because this would be telling you there's a change in trend in the high-yield bond fund out there. That would bode well for the S&P 500. At this stage, the HYG got to where it was supposed to get to. So, where's the icing on the cake out here? It's pretty simple. Right now, the advanced decline oscillator reading for the New York Stock Exchange, so we've got about a basket of stocks of maybe 2,500 out here, is below zero. Tells us that the sellers are still in control of this market. Yes, they are. Now, they've been in control for just about a week or so out here, so we will be watching that. The other thing to watch is the spot VIX index. Right now, it's trading below. Remember when we opened up the show? It's trading below the 50-day. I said 16 and change at 1608. We're trading at 1556. If it closes over 1608, that top was probably Friday, last Friday. See Rhodes with TFNN. Thanks so much for being here. Stay tuned. David White's up next. Tom O'Brien, 3 to 5. I'll be back with you on Wonderful Wishful Thinking Wednesday.